Welcome students and scholars. Today we begin Accounting Standards Codification 210 Balance Sheet. Let us start with one simple but powerful idea. The balance sheet is not just a table of numbers. It is the financial position map of an entity. The balance sheet shows three important things: the resources the entity controls, the obligations the entity must settle, and the residual interest that belongs to owners. Many students try to learn balance sheet rules account by account, and very quickly the topic starts feeling scattered. So in this first video, we will build the big picture before moving into the detailed rules. Once the map is clear, the technical rules of ASC 210 become much easier to understand, remember, and apply. Here is the first exam and professional trap. A balance sheet can balance perfectly and still mislead the reader. Yes, assets may equal liabilities plus equity, but if items are classified incorrectly, the story becomes distorted. Liquidity may look stronger than it really is. Debt pressure may look lighter than it actually is. Exposure may look smaller if assets and liabilities are netted without proper support. That is why ASC 210 matters. It brings discipline to presentation. It reminds us that financial reporting is not only about recording transactions correctly, it is also about showing financial position in a way that users can understand and trust. ASC 210 becomes easier when you separate its two subtopics. ASC 210-10 is the overall presentation area. Think of it as the classification and structure part of the balance sheet. It helps us understand current assets, non-current assets, current liabilities, non-current liabilities, and the broader statement of financial position. ASC 210-20 is the offsetting area. It asks a different question. Can a financial asset and a financial liability be shown as one net amount? So keep this distinction clear in your mind. ASC 210-10 helps us decide where items belong, while ASC 210-20 helps us decide whether gross amounts can be collapsed into a net presentation. Now let us use a very natural image. The balance sheet is a snapshot. Unlike an income statement or a cash flow statement, it does not tell the story of a whole period. It captures financial position at one specific date, such as December 31st. At that date, we ask three questions. What resources exist, what obligations exist, and what residual equity remains after liabilities are considered. This point-in-time idea is not just theory. It affects classification, presentation, and how users read liquidity and solvency. So whenever you study ASC 210, keep asking one disciplined question. What is true at the reporting date? The next idea is the time gate. ASC 210-10 sorts assets and liabilities into current and non-current sections. The question is not only what is the account name, the better question is when will this asset be realized, sold, or consumed, and when will this liability be settled? Usually we think in terms of 1 year. However, the operating cycle can matter if it is longer. That is especially important in industries where the business cycle is naturally long. So do not classify mechanically. Think like an accountant who understands both the standard and the business. Timing is the heart of current and non-current classification. Now we come to the netting gate, and this is where many students and even professionals can become a little too casual. ASC 210-20 starts with a conservative mindset. Show assets and liabilities gross unless net presentation is allowed. In simple terms, do not reduce the balance sheet just because two amounts relate to the same counterparty or because the net number looks cleaner. For netting, the entity needs proper support, especially a legally enforceable right of set-off and the required intent or ability to settle net or simultaneously. We will study the detailed conditions later. For now, remember this classroom rule. Gross first, net only when the standard allows it. Here is your memory map for the whole ASC 210 topic. Snapshot, time, netting. Snapshot means the balance sheet captures financial position at one reporting date. Time means assets and liabilities must be sorted into current and non-current categories using the 1 year or operating cycle logic. Netting means we decide whether items should be shown gross or whether ASC 210-20 permits net presentation. These three words are simple, but they are not childish. They are a serious professional memory structure. Use them in exams, use them in revision, and use them whenever a balance sheet presentation question feels messy. So this first video gives us the foundation. We now know that ASC 210 is about financial position, classification, and disciplined presentation. In the next video, we will move into the complete explanation: statement form, current and non-current assets, current and non-current liabilities, presentation choices, and offsetting rules. If this lesson helped you build a clear base, please like the video, share it with colleagues and students who are learning US GAAP, subscribe to Commerce Regiment, and support the channel by continuing this learning journey with us. In the next episode, we move from the big picture to the full ASC 210 rule logic.